Alright, so this is my video on the best alternatives to SCHD, in my opinion, not financial advice. And the point of this video isn't to drag on SCHD, rather it's the complete opposite. SCHD is such a phenomenal ETF. Is there anything else in the market that comes even close to it? That is what we're going to try and find out in this video. If you guys enjoyed this topic, I just made a similar video on the best alternatives to JEPI, so income funds that have some kind of a covered call strategy. But this video is all about SCHD and the best pure equity dividend funds on the market. I hope you guys enjoyed the video. If you do, a like, subscribe, always greatly appreciated. And today's video is actually sponsored by Aura. I don't need to tell you how important online security is. Everything from fraud to annoying unsolicited emails is a breach of your private information and security. This is where Aura, today's sponsor, can help protect you. They are your all-in-one internet security hub. They offer fraud alerts, VPN for secure browsing. They can monitor your passwords and notify you on any data breaches, malware protection for all of your devices, and my favorite, getting your personal information back from online data brokers. Data brokers buy and sell your personal data to the highest bidder, exposing you to unwanted spam emails, robocalls, and targeted advertisements. Aura will identify those data brokers and automatically send opt-out requests on your behalf. You can use my link, aura.com/NPL, to try 2 weeks for free and see how many data brokers are sharing your personal information. Link is below the video, or you can scan the QR code to get started. Okay, so when it comes to regular equity dividend ETFs, there's hundreds of them on the market. So we have to begin to filter out some of these names. And this right here is how I went about doing that. So my number one filter is, of course, top performer. And this top performance has to be consistent over the past 5 years, so not just the past 12 months. So because of this criteria, names like SPYD, HDV, and SPHD are being eliminated. When you look at the 5-year total return chart against some other names, there's a clear difference in performance. Now, with that said, I'm not saying that these funds are bad investments. Something I really enjoy doing is reading the actual description of each fund and seeing what approach they take. For example, if we come to SCHD, this is their fund description. So they look for firms that have a 10+ year of paying dividends. They also look at the finances like cash flow to debt ratio, return on equity, dividend yield, dividend growth rate, all these different factors. As we saw, SPHD in comparison doesn't have the same level of return, but their strategy, their approach is completely different and might fit your portfolio a little bit better. So the strategy here is to pick the 50 least volatile names from a short list of the S&P 500's 75 highest dividend yielding securities. So again, this is super important to keep in mind, and it's something you definitely need to read. But for the purposes of this video, I can't really take all of that into consideration, and solely based off of the performance, I'm going to be eliminating some of these names. Okay, now the next filter I have is a minimum of a 2% average dividend yield. And I think you guys can understand why I'm putting in this filter. The main point of dividend investing is to get a meaningful amount of the return paid to you in the form of cash dividend payments. And when you drop below a 2% dividend yield, you're not really generating much more income than the S&P 500. So due to this criteria, names like VIG, DIVB, and even DGRO are being eliminated. So here's the 5-year dividend yield history of VIG. Right now it's 1.99%, so it's very close to that 2% minimum, but focusing on the average, most of the time we are well below 2% here. DIVB focuses on dividends and share buybacks, but because of that, the yield isn't really that impressive and it often dips below that 2% threshold. And this one might be controversial, but I'm also putting DGRW into this category. It does have the highest yield at 2.12% at the current moment. You guys know that the dividend yield and the share price are inversely related. So as the share price goes down, like during a bear market, the yield tends to go up. There have been times where the yield was well above 2%, but there's also been multiple times where it's been below 2%. So even though these three funds are fantastic performers, they are being eliminated. Okay, the next point here is best of class / long history. And what I mean by this is no funds that are produced within the last 5 years. They have to have a long proven track record. And the big name that this is eliminating is ticker DIVZ. If you guys follow the channel, you know that I've recently made a video comparing this against SCHD. And it is one of the few ETFs that can actually go toe to toe in terms of performance with SCHD and kind of win. The big asterisk, though, is that the performance only goes back to 2021, and there's a chance that if the performance went back longer, the results might be different. And then finally, my last filter here is no options, because that's what my last video with the best alternatives to JEPI was all about. Dividend funds that have some kind of an option overlay strategy. This video is just about the pure equity dividend ETFs. So with all that in mind, I want to begin by showing you guys the honorable mentions. These are funds that in one way or another had great performance. I really like them, but I just couldn't crown them as the best of the best. So as a reference, SCHD is always going to be this orange color. The first name here in blue is QDIV. This is by Global X. Over the past 5 years, they have a return of 54.82%. Next, of course, we have the classic VYM. This is always a good option, but it's just never the best based off of my research, my opinion. It has returns of 40% over the past 5 years. We have ticker DVY here in green. Great performance, 53.49. SDY, 46.97. And then most notably of all is ticker DGRW. I almost put this as one of the best funds because in terms of the return, 61.47, it is second only to SCHD itself. But the reason why it's here is because the dividend yield on average is below 2% and SCHD is usually above 3%. Yeah, so these are the honorable mentions. I think they're all very high quality. And again, I would encourage you to read the description and the strategy of these funds because even though they don't have the absolute best performance, they might be a better fit for you depending on your situation and goals. Okay, but this is the page you guys have all been waiting to see. So again, SCHD in orange as the benchmark, the comparison. On this page, we also have the S&P 500 total return in blue, just as another point of comparison. And then based off my research, I came to the conclusion that these three funds are the best, most stiff competition to SCHD. And it begins with DGRO with a total return of 55%. So the strategy of DGRO is pretty straightforward. It follows a dividend growth strategy. And the fund aims to find stocks that pay steadily increasing dividends by requiring a 5-year track record of increasing dividends while ensuring that the firms pay out no more than 75% of earnings. The fund itself is extremely well diversified with 449 holdings. And we have names like Microsoft, Apple, JP Morgan, Exxon. You gotta notice that there's a good amount of growthy technology names mixed in here because this is not focusing on just having a high dividend yield. It's dividend growth. Fun fact, DGRO has a 52% overlap with the S&P 500, and the current dividend yield is 2.39%. If we look at the history of that yield, it does dip, but it's usually above that 2% threshold. And in terms of the comparative performance, DGRO is the purple line. Pre-COVID, all of these were very competitive with one another, and then post-COVID, the purple line is lagging behind SCHD by a little bit, although since the beginning of the bear market, it's done a little bit better holding on to its value. The next best fund I can find that can hold a candle to SCHD is NOBL here in green. Now I'm kind of breaking one of my rules here because historically the dividend yield does dip below 2%, but I think most of the time it's above 2%. And on top of that, NOBL is just a classic dividend fund. This is focusing on the S&P 500 dividend aristocrats, which are companies that have increased their dividend for at least 25 consecutive years. And in terms of the performance, I will say it seems like NOBL has the weakest performance out of this very exceptional bunch of ETFs. And then my final name on the list is actually one that surprised me. I was completely unaware of this ETF until I conducted the research for this video. And the ticker we have here in red is TDIV. So TDIV holds a dividend-weighted portfolio of up to 100 companies classified as a technology or telecommunications company under the industry classification benchmark. TDIV limits its portfolio to US-listed stocks that pay dividends, two filters that significantly narrow the global technology universe, causing it to exclude certain segment giants. Its international exposure comes mostly from ADRs. The companies included are first weighted according to their dividend yield relative to other securities within the index, then adjusted accordingly so that tech companies occupy up to 80% of the index, while telecom companies occupy only 20%. So you guys get the point. This is a technology dividend ETF, and it still manages to give you a dividend yield of 2.32%. Historically, it has dipped below 2% occasionally, but often it is well above that threshold. And it gives you exposure to very high quality companies. Broadcom at 9%, Microsoft 8.5%, Apple, Intel, okay, well, Intel's a little bit shaky right now. We have IBM, Oracle, Texas Instruments, Qualcomm, TSMC, and the list goes on and on. And it's definitely worth noting that one of the secret ingredients of SCHD's great performance is the fact that it does have a lot of technology exposure for a dividend ETF, albeit TDIV takes that to the extreme. And as you might expect, when it comes to the performance, this is by far the most volatile. So for example, at the end of the bull market in late 2021, this had great upside in performance. Since then, it's been more volatile, at some point being down the most, but again, it also tends to go up faster than these other names as well. And I gotta say, even in this difficult market for technology names, this fund is still doing better than the dividend aristocrats. But in my opinion, and based off of my research and my criteria, DGRO, NOBL, and TDIV coming out of nowhere are the best competition to a fund like SCHD. Also, keep in mind the honorable mentions: QDIV, VYM, DVY, SDY, and most of all, DGRW. And just to see how it looks, if we add DGRW to the list of what I'm calling the best dividend ETFs in the market, we get this. It's in purple, and you can see it is very competitive, outperforming a lot of these funds, but still a little bit behind SCHD. And again, the yield is quite a bit less. If you guys are still watching and enjoyed, leave a like before you go, subscribe for future content, and I'll see you guys in the next one.